Hello, 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 and a massive hello to everybody. Hope everybody's having a great day wherever you may be, whatever you may be doing. Happy 4th of July, everybody. So let's see what's going on. As usual, no trade calls, no recommendations, every response for their own stuff. We're here for educational purposes only. So what's going on? What's going on? Well, we'll go into here. We'll start shortened trading week. So basically Wednesday, Thursday, Friday trade. We'll have plenty of stuff going on. We got all those PMIs coming out on Wednesday. We got the FOMC minutes. On Thursday, we got some data out of, we got the weekly jobless numbers. We got ADP. We got trade balance out of Canada. We got the PMI again, crude oil inventories. And on Friday, we got a bunch of data out of the UK, out of Canada, out of the US. So again, it should be fairly interesting as we head into then the G20 meeting. So I think the key story or the most interesting thing is still the equity side, right? And we've been talking about the fact that we feel that something broke in the NASDAQ a couple of Fridays ago and that we feel the top is in, right? Or a potential top is in, and we're going to see some kind of a correction, or at least a healthy correction. And what's also interesting is if you look at something like the DAX, right? If you look at this on basically on a weekly, you had a very aggressive close back below this breakup zone, right, from 2015. So again, failure to hold this is not pretty for the bulls, right? Now, it doesn't mean this can't continue and end up much higher, but right here, everything is pointing to the market being fairly weak and looking for some kind of correction. So what we would focus on is look at how we react here early in the week. If it can try and catch a bid, it might try to press higher, but we still suspect sellers will come in. For us, it still looks like the healthiest option is to see some kind of correction, at least back into the 50-week moving average, possibly bigger, but that's fairly one of the most interesting things, especially European equities heavy. If you look at the ES, similar kind of, let's go on to the daily. Similar kind of action where it's struggling. As we said on Twitter, it's just really a flesh wound, right? Because the market came in and bid it up exactly where it had to bid it up, right? Ahead of here and ahead of the big resistance. So as long as it doesn't trade back below there, you see we haven't got any daily closes below the 50. It's going to be very difficult for this to really sell off, but it does look like it's tired. It does look like it's struggling here. So let's see what happens when the vols come in. Let's see when the flows come in, how we trade. But if we suspect we've got unfinished business at around that 2400, and if we start to get daily closes or weekly closes below there, then we think it's game on for a much bigger correction. But right now we think we've got some unresolved business down there, and we'll have to see how that trades, and that will be the bull bear line. And again, the key tell for us is being the NASDAQ, as we said. No real change there, with a lot of interesting opportunities to trade this. A lot of the tech names, right? We were stuck inside this big range. And you see that, the moment we broke back below, it's very hard for this to catch a bid. So again, we think we've got more room to correct to the downside. And this is something that's fairly apparent if you look at some of the big names. If you look at Amazon, we highlighted on the blog too, the asymmetry here, right? With all those failures at highs, the opportunity to get short with stops above these highs, looking for any one of these healthy corrections. Very nice asymmetric risk reward. If you look at something like Tesla too, again, trading views being a little bit slow here, but again, on that failure, on this big break, then bam, negative close. It's usually hard for stock to rally after you get this kind of action after a break above highs. So again, very nice risk reward to try and get short off those highs, looking for that correction. Whether you're looking to this breakup zone or whether you're looking for a move back into the 50, this whole area, there's clearly a lot of potential to the downside. Again, it's just a correction. It's not the end of the world, but that no big change. Familiar readers or viewers of these videos will be familiar with that. We think one of the most interesting dynamics is here clearly on the bonds, and we discussed this, right? And our base case, as was with pretty much most instruments across the board going into last December, going into this January, was that we expected that we had some unresolved business in the November peaks or, highs or lows. And we've seen, Euro, DXY, we've seen a lot of these come back and grab those highs or those lows. And our base case was, again, at the end of last year, that bonds were going to rotate back into this level, at which point it would be a nice shorting opportunity to get back short from a swing or structural perspective. Now, it's labored, right? It's labored here. So the big question is, have we seen the correction and are we going right back down? Or is this just a little bit of wheeling and dealing inside the holiday week? We'll have to see what happens. We'll see some seasonal weakness come in on equities in the summer, and these will catch a bid again. So first things first, just right here, we'd be very focused to see how we behave here around this 153, 152. If we can hold, then we suspect it's going to try and continue this rotation higher, right? If it can't hold, we start to get closes below this 100-day moving average, etc. Then we could see some nasty action, potentially some 1, 2, 3 quick bucks to the downside. And basically we'll have given back all the yearly gains pretty much. So we'll have to see how this trades, but this is probably the most interesting chart right here for us. And we'd be watching this whole 132, 132, 153, 152 area very, very closely. In terms of what else we got, in terms of crude, again, we flatten up all our swing shorts on crude. Especially when we weren't, when you see it unable to press lower on negative data, that's when, short term, you think it's time for a healthy bounce, you got to get out, right? So we starting to flatten out, if you remember, on those prints. And right here, we're just getting a healthy correction, right? So the big question is, how's the data going to continue to come out and what's going on? But for now, it's just a pure little healthy correction. What we talked about was a move all the way back into this area with all the confluence of this trend line and all the moving averages coming in here. And we said, as long as we don't start to get daily closes above the 50, we suspect this to still be a labored move lower, right? We don't think it's expensive enough to sell. We don't think it's cheap enough to buy here. So we'll be watching this very closely, but we think any pop here could be a very interesting short, and maybe this could be a buying opportunity, but we think we're looking at 50s or 45s would be interesting right here. Right now, not a lot to do, but as far as we're concerned, just a healthy correction and trend right here. Gold. We talked about the fact that as long as it didn't close below the 200, we suspected that this was going to try and bounce. We said day close below the 200, we would expect it to come right back down and try and press into this 50 and into the 112, because basically we're looking at 1350, 1300, 1250, 1200. Right here, it's very heavy, right? Unless it can close back above the 200 DMA, we suspect this is still going to try and make its way back to the 1200, and below 1200, then 1150, possibly 1100s. But we think that's going to be a very tricky nut to crack, and we wouldn't be too interested in getting back swing longs or getting aggressively long unless we're trading back above the 200 DMA, only tactical plays. But again, not a lot's going on. It's tricky to say because we've had these 2 days which are basically holiday trades, so we just have to be a little bit patient, see how the market opens here. But I still wanted to do a video. DXY, so we're seeing a healthy bounce, similar to, oops, where was that? That was there. You see, this is one of those charts where we made it back down to those November levels. So here we'll have to see how this trades. All things being equal, it would be healthy to see some kind of bounce. The big question is, does this 96, 97, does this cap any bounce and we continue lower, or are we going to get a nicer, bigger bounce maybe into the 98s and then continue lower? But again, very choppy zone. It's very tricky when you see all these big wicks inside the zones, because it means you might get some very, very choppy action inside this area. But most likely aggressive sellers will be trying to sell it right here into this zone to keep aggressive pressure on. But all things being equal, a little bounce would be healthy. The other thing to keep an eye out, we have very nice reaction. We pointed out on the blog about this key resistance on Aussie, and you got a very nice little chance to sell this with very tight risk. Right here, resistance into the 77s, support into this multi-confluence of these moving averages. If we get daily closes below, we expect 73s, 72s to come very, very heavy. Inside this mid-range, very, very choppy. And if we trade above 77s from a day close, we expect all the stops above these zones would have to get taken very quickly. So we'd suspect day close above the 0.77, 0.78s and higher, 150 pip squeeze could come very, very quickly. And that's a similar discussion if you look at Kiwi, right? There was a nice opportunity here to try and get short. It's been extremely choppy off those highs, but right now it's all about this area, right? As long as it can bounce off this descending trend line, this previous resistance that's acting as support now, then you probably have unresolved business to take out some more stops to the upside. Day close below, back inside, then we expect 71, 70, 50s to come extremely quickly. Cable, we talked about the importance of that 130 mark, and basically we're stuck. Right, we're stuck at that 130. Day close above 130, we expect 132s to come very quickly, possibly 200 pip squeeze. As long as we close below, we expect it to come right back down into the 128s. We're looking 128s, 130, 132s. Choppy, we favor trying to play some downside. Only day closes below 128s, we'd be looking at 126s, and only day closes below the 126, we'd be looking for a move to come and take out these lows. Right now, very choppy inside this area. So again, not an awful lot has happened, but you know, the moves are trying to play out. So again, hope that was useful, guys. Thank you so much for sharing. Thank you so much for liking, as always. Thank you so much for the banter on Twitter. Have an awesome one. Short week, but we should see plenty of action, at least fingers crossed for plenty of action. Have an awesome one, and see you guys on Twitter and on the blog. Take care. Bye-bye, guys.